What's up, guys? In this video, I want to show you a really good method to trade trend continuations based on a pullback. It's extremely easy to identify and it helped me a lot in my trading. So how this works is we first need to identify our impulse leg and then we want to wait for a correction to happen, whereafter we search for our setup in our supply or demand areas. So an impulse move usually happens when it breaks some form of a structure. In other words, it can be a high or a low, or it may break out of a sideways market. Now, in this situation, I've already drawn up the high of our range, which is in here, right? So this is where the price broke out of. So in my opinion, I count basically this whole move from this low till this high as our impulse leg. Okay, and the zones it creates when it starts to break out and goes higher, zones such as these. All right, and here we have another zone. I take them into account because these are the zones we will reference to when price starts pulling back down. So with all of that being said, you probably ask yourself, when do you know that a corrective move starts to take place? And I will explain that right now. The first clue when a pullback is being initiated is when we see a shift in a substructure of our impulse leg. So let me clarify that and show you what I really mean by it. So when we follow the order flow of our current leg, so that means, let's say we have our high, we have a low, and then we break the high, we make a new high, we establish a new low, and then we follow the same principle again. When we could not, well, price could not make a new high, instead, it makes a new low. This is a good indication that we are in a pullback. So because apparently price could not make a new high, so instead we shifted lower. So at this point, we officially can say that we are in a correctional move and we can start looking for our setup. Now, since we are looking for a bullish continuation trade, we need to mark out our zones, right? I've already marked them for you. All right. So this is a example like where I could see only two demand zones. All right, so we can argue that this also is a demand zone. This one right here, this will be an order block. However, I typically don't trade order blocks a lot. However, they are valid zones, right? But let's just focus on these two zones right here. So guys, it's really not our job to predict how deep the price will retrace. The only thing we want the market to do is break structure and switch momentum when it hits our zone. So here is how the process looks like. So from this low, price makes a new high. So we go down and we go up, right? So basically, this whole section is our range. Now, it does not close above here. Instead, it breaks down this low. It hits our demand zone, but did we see a break from this high, right? So we break this low, we pull up, we do not break this high. Instead, we drop down and break this low again. So this immediately invalidates this whole demand area. All right. So let's just follow price next. When we broke this low, this will be our confirmed high, and this will be our current low. Now, as we move lower, we can see more bullish power coming in the markets. However, did we close above our current high? Now, we did not. So we still sit on our hands and do nothing. So as we continue, we see the price creates a new low and hits our demand area and creates this range. So then we have this new created low, and this will be our confirmed high. Now, instead of price making a new low, because there is a new attempt to do so, but it fails to make a new low, instead it pulls up and we have a breakout with a big body candle. And this is exactly what I want to see, because not only it shifts the market to the upside, but since we have a big bullish candle, there is a lot of momentum behind the move. So our probabilities behind these type of setups are in our favor. So there are many ways to enter this type of trades, but in this particular scenario, since this is a very small range, I will just take, well, the wick of this supply area, of I mean demand area. It's basically this whole area, right? And then just place an entry right there, and then we can just go off of that, and then our stop loss will be under the low of the demand area, and we can target these external highs. That will be the target. And since as you can see, price usually moves a bit higher just to fake out these traders and to take their stop losses, we can capitalize on that and we can just take profit a bit further. So in this case, we will get 1 to 2 risk reward ratio. So guys, I hope you've learned a lot from this video. And if you're not profitable yet and have a need to trade with someone experienced, just message me on Instagram and I will give you access to a group which trades only on gold and they are smashing it. It's insane. All right, my Instagram handle is in the description. I'll see you in the next video.